Hello, how to create a stock watch list for beginner swing trading. We are going to analyze some stocks together. We can leave our 2025 watch list and go back to our bigger list of stocks, and those are large cap growth stocks. And if you just start swing trading, depend on your strategy. We are using Uptrend swing trading strategy, therefore we are trading growth stocks. And as a beginner, I will recommend large cap. They do not make you a lot of money very quickly, and you are not going to lose a lot of money in them either. And because they are growth stocks, if you buy at a wrong price, at a higher price, you can just leave it in your portfolio like an investment, and at some point it will become positive for you to sell. I have some stocks that I purchased in 2024. They are negative in my account, and I still have them because I know at some point they will become positive and I will sell them for profit. And I can learn from that experience, and to buy those stocks again, I will buy at a price better that I purchased it before by learning from my experience from before. So we are swing trading the same stocks, and going into 2026, we can create a list. We can review, reanalyze all the master list stocks on it to see what stocks we didn't have in 2025 watch list, to see if we want to have it in 2026 watch list. We have 5 that we can analyze together, and the first one is going to be CVX. To do so, you can use maximum monthly chart so that you can see a big picture of the stock. So CVS, now that you have the chart in front of you, you will look at the bottom of the V's that you are seeing, and we are going to connect those and call them the valley lines. It's pretty much the bottom of the chart, and you want it to start with the closest two point that the closest point to where you start. If that one will go too much across it, you move your line back to see which one will fall right underneath your line. You need at least 2 points to trace a line, but because we are using a straight line, it makes it a little easier as well. So from there, we are going to continue tracing because that line is too low. We don't think it's going to go back there, so this is not too far from it. So from there, we are going to continue. So this, it seems like, is where it is right now, and this is more likely to be the valley line. Those are just too low for that to come back to it. We are using Thinkorswim, and that is maximum monthly chart. Every single bar you are looking at it, or vertical lines, they are year. You have the year on the x-axis from the past to the present. You can see 2025 there, and you have the y on the you have the price on the y-axis from 0 up. So there is so many years that it has not touched base with those two lines. So this will be more like the valley. Moreover, it touched base with it in 2025 and start going up already. We are going to catch it though. So those stocks that we are analyzing together now to have in our watch list for 2026, good news that we start analyzing it, together in October. When we come across one that is already positioned for us to buy, we are taking note of those, and this is one of those. So, but anyway, we see this line is higher up. Great. Is the low is we are having higher lows, therefore we have a good valley line here that is still going up. Now we want to see a higher high, so we have higher highs here. We have it here as well. Pretty much 4 years later, 1, 2, 3, 4 years later, it breached this peak and then continue for a while and reach that peak, pull back. But interestingly, it has now exceeded yet, and I'm not entirely sure why. So it pulled back, start going up, but didn't quite reach it. Pull back and start going up again. Maybe this time it'll be able to reach it. I don't know. Because of our strategy, we like to buy at the value line and sell it after a new high is reached. And a lot of time when I see something like that, I don't add it to my watch list, because again, we don't have a good higher high here to sell it at. So now, unless you want to sell it when it exceeded the previous high, that's a possibility as well. But it has been on this rise for so long, but for some reason it's not creating a higher highs. We want to be seeing a higher highs, a higher high. So that's one thing. So second, let's see the difference, the price gap between the valley and there. So let's just, when it left around the valley here, it was at 27, and here is 113. 113 divided by 27 is 4 times the price. And around here, it came close but didn't really touch base with it and start going up from there. And here was 55, here is 109, pretty much double the price. He doubled the price but didn't go higher than that. So from here, it came back down to 44 and start going up from there. So one way, if you want to trade this, will be to buy around the valley line and sell it when it exceeds this previous mountain, or buy and wait when a new high is reached to decide to sell, or if you want to stay in the trade longer. But again, because it's not creating a higher high, we are now going to add it to our watch list. So I'm going to turn this back to the gray line. It has a good valley line, but it just does not, it's not showing a growth at the top. So therefore, you have to decide how you want to sell it. Otherwise, it's well positioned, it's already taking off. Could be a good time to buy it. Since we didn't catch it around here, we can still get in. But because it's not showing growth at the top, we are not seeing higher mountains. For that reason, again, this 2020 going into 2026, we are not going to add it to our watch list. One more thing we can think about as well is there could be a reason why it went that high in 2020, in 2015, and it was not able to reduplicate it, but it's getting close to it, and once it breaches it can take off from there. That is a possibility, and with that in mind, we can decide to buy one share and see, if it will go there or not, or decided to sell it a little bit quicker. So now we can come back to maximum daily chart and look at what is doing around that trend line. It's not too far from it, and here we can decide to trace some support line here to see, yeah, is going along that line. And one thing I can do with this one is I can decide that today, if we have a green bar, just buy some share and just leave it in the portfolio to keep an eye on it to see what will come out of it. That could be one way as well. Other than that, I'm very lenient adding it to my portfolio because it just does not meet my peak. It's not creating a higher highs here, but I like to see, you know, if there is, we can give it an exception. Those are decisions you have to make for yourself when you are analyzing those charts. And this is just a preliminary selection. And as you are, if you have too much in your list, once you pull those out, you can decrease, you can reanalyze those charts again and shrink it down again. But it's not, I don't know, it has not, we can put it there that has not a good valley, but no peak, no higher peak. Since 2015. Okay, so the next one is DGX. Good. So when you see things like this, you'll wonder, why will you be putting CVS in your list? So this, you can see the growth. Without even tracing any line, we can see it's growing. We are having higher valleys, higher lows, and we are having higher highs. So, and in 2025, we even have high there. So now we have that valley. Since it has not touched base with this valley in a while. Last time it touched base with it was 1, 2, 3, 4, 5, 6 years ago or so. So let's see if there is another support line that is following. It seems to me that it's following this one. So this one, and because this one is quite some years as well, and we have multiple touch point, even in 2024, we can select this one to be our entry point. Right now it's still going up though, and based on the strategy we are using, we can just wait on it for that to come back. So we can look at the peak. It's pretty much like about a year or so it will create a higher peak. So from here, it took 2 years making higher highs, and then it pulled back. And here it didn't really reach it. It pulled back again before it breached it. So here it took longer. It took 2-3 years before it breached it, and it's still on the rise. So 3 years. So let's see how it did it here. 1, 2, 3. Okay. So when it touched base with it here, 2. Okay. So 1, 2, 3. When it came back and start the journey. So we are going to keep it in our watch list, but it's kind of higher up. It's not buying time just yet. We want to buy at that line, but we can clearly see that it's making higher mountain often. So good, this will be a good one for our watch list. For swing trading, this will be more like an investment type things, but using swing trading strategy to buy. So UNH, I'm not entirely sure what it's doing, but we can trace some lines here. This is low, and this one will go there, and this one is there. We can continue tracing is there. So this one has more touch point. This will be more like the valley, but then you pull back to here and start going up from there. So there is a possibility this does not have a good touch point. Other than there, this one has more. So for some reason, it pull back to here. Okay, that's good to know. So this will be a valley for us. This will be a valley for us. And right now, it's climbing up. It could just be like some fund, major funds, companies, they must have liquidated, their some shares to balance their account, and it drop the price. When you have a lot of offer and now so many of demand, the price will go down. Or maybe it missed some earnings. Who knows? That makes them dump their shares and drop the price. And now we can see, yes, almost every year or so is creating higher highs, and then a plateau here, but then went up again, and then from there it start going down. So quite a bit of growth, but then pull back. So, and it pull back and start going up. So it is a buying time. So we are seeing higher highs, and we have a good valley here. So we are going to select those. This is a one that it may not come down to this valley line often, but there is a chance it might. So since it has not reached the top yet, it's still around somewhere here, closer to this one, but close to this one as well. We are going to go to maximum daily chart, and we are going to see what is going on here. I'm seeing some higher. I'm seeing that growth there. If I go this way, it's just going to go across it. I think I'm going to leave it like that. And it's somewhere here right now. So pretty much it's going down. It went up and it's going down. It went up, it's going down. So what I'm going to do is I'm going to keep observing it here, just in case it pull back a little bit lower again before start going up. I'm going to wait to see if I can see few higher lows here. We have some higher lows here. If you compare the red bars, this is higher than that one, which is higher than that one. So, but purchasing it somewhere here, then it pull back, went up and pull back. So I'm going to keep an eye on it, and when I start seeing few higher lows, I will buy some shares for it of it. So let's go back to, so this is going to make it to our 2026 watch list. The next one we are going to analyze is ELV. So ELV, we can trace some lines here to see if we can find the value line that is following. It seems to be this one. Okay, now let's see if we can see some higher highs. So we can see this peak, it breached within 2 years and continue for 2 years before it pulled back, and within a year it breached it and has been on the rise for 3 years or so, and still on the rise, pull back in a little bit here and reach a new high, and now it's on the drop. So it pull back to it and start going up again. So we are having higher highs. It can be on the rise for years. From here, it took 1, 2, 3, 4, 5 years before it was down, and then within a year it pulled back. So and start going up again. So this, we have higher highs, we have higher lows. It's going to make it to our a selection, and that will be the line to buy at. And since it's around that line, is around the valley line, we can go to the maximum daily chart to see what is doing there, if we can buy it. And we can see we have that red, which is higher than this one, but then this is lower than those. So if we try to trace some support line, it's going to go this way. It's kind of down right now here, and technically to buy it, it'll be good to wait until it go back up to this line, and start going on it. That's great. But again, I'm going to be paying a higher price doing that. And since I'm in it for the long run, I don't need to be precise. So if I see a green bar today, I could buy some, knowing fully that it could turn around and come back down to this, to this valley line. But it will still be, purchasing it somewhere here will still be cheaper, because it will be close to this valley line, than purchasing it somewhere here. Does that make sense? But if I purchase it and it pull back, I'll just be trapped in it for a shorter while before it start going up. But again, it's around that valley line. Therefore, if I see the green bar today, I might buy some share, knowing clearly that it could be an early entry. I'm not seeing a lot of higher lows here to base it on. It could pull back before start going, just like the way it went up and pulled back. But I'm fine with it. And from where it is right now, 325 to 75 is 75. $100, 25. I don't know, you do the calculation. Difference there. But anyway, it's going to make it to the watch list. And since it's at the valley, we can buy some share as well. Let's check this one. So it might be a good idea to, working on your watch list for the new year. It might be a good idea to start in October, because we start doing it together in October, and we start seeing stocks that are positioned already around the valley line to be purchased, because those were not in our watch list for 2025. We have not been analyzing them. So maybe, when you have a long list of those stocks, starting it well ahead of the new year could allow you, just for the ones that pull back to that valley line, they will make it to your watch list, and they pull back to the valley line around close to toward the end of the year. You'll be able to find them on time and getting the trade even before the year end. So this one, we see this might be a good valley line. We have some touch point to it. We can even trace some that might go a little bit higher, but it's not going to be a valley line. It's going to be more a supporting line, supporting the upside wall of the mountain. Okay, because it climbed it up for a while, and now it climbed it down. So, and it has been on that rise for a while. So let's see the peak of the mountain. So you can see it's making higher highs almost every few years. 1 year here, and when it pull back, about a year it exceeded, pull back, continue, and in 2023 it reached that peak, and it took 2 years to come down, because it has been on that rise for so long. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 years. Don't know where I counted from, but from this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 years. It has been on the rise for 10 years and took 2 years to come back down. 10 years, 2 years. Now it's around the valley line. So it's going to make it to our watch list 2026. It was not in the list in 2024 and 2025. So since it's around the valley line we like to buy at, we can go to maximum daily chart. That's where we analyze to buy. And we can see what is going on here. So when we are looking at it, it's doing that. It's still on the drop. I'm not seeing any high, it's not going up just yet. Although it touched base with it, and then it did that. So what I'm noticing it too, though, for those stocks that I know that when I purchase it, I'm going to hold on to it for some while. It touched base with it. So when I look here, I start seeing some higher highs like 1, 2, 3, and purchasing it here. For instance, if I purchase it, we purchase it here, we have not seen anything below there yet, but it went up and it's coming back down to it. With that in mind, though, it makes me think if I see a green bar today, I will buy it, even though it's showing me a downtrend here. I don't even know if I'm making sense because I'm breaking my own rules. I have to see a few higher lows to tell myself that it's down going down, or it might be down going down, it start going up to buy. But time and time I notice that even that does not work well for me. It will pull back a little bit more before it will start going up. So that makes me wonder, it does not even matter if waiting to pay a little higher price for it, but still it might turn back down before going up. So with that in mind, and knowing that I might hold on to this for 10 years or so, or at least for 5 years or so, would that matter buying it there even if it continue going down a little bit lower? Does that make sense? Those are things you just have to decide for yourself. Because for somebody, let's say it was on the drop down menu, so even if somebody purchases somewhere here, because this one is right around that line, only 1 day or 2 days that any price went below it. The risk with that is if you end up buying it at the wrong value line, you'll get trapped in it when it's going lower and lower to touch base with another line. With this in mind, because it has been lingering around this value line for a while, you can see it has been wandering around this line. So for more than a year, it has been around this area since 2024, around this valley line. For that reason, it's now really here to start going up. So we can just buy some and just let it be for it to continue doing its things. And when it's ready to start going up, it'll just start going up from there. Because again, buying it where is showing all these higher lows here, you can see those red bar higher than the previous one, will put you at a higher price, but then there is this area that you'll be negative in it. Does that make sense? So with that in mind, I'm just feel like when I determine my value line, when it comes close to the value line, even if it's done well, maybe I will just buy some, because applying the rule to buy when I start seeing few higher lows, sometimes it just does not work. You pay higher price for it, you get trapped in it when it can turn around for a while before it's ready to start going up. Why not just buy around the line when it touches base with it? But again, that comes with a risk, because it's down while going to it. You don't see the proof that it start going up. There is a possibility that it might continue going lower. So whatever amount you want to buy, maybe you might just divide that into 2 or 3 and just make a few purchases just in case it continue going lower, you can make few more. It's all by trying those different strategies that you will see which one you are comfortable just using. Does that make sense? Today, if we see a green bar, we might buy some share and just let it be. So this is going to make it to our watch list. And since I'm just going to put short-term investment as well, and it's going to be 10 years growth, 10 years growth. Was it 2 years pullback? So this conclude, how you will review those stocks to see which one you want to swing trade. And right now, I believe we picked this one. I had to double check though. We picked this one. I think there is one more, but I have to double check. That could be a buy today. So I will come back to, I'm putting them somewhere here. When I come across them, and I'll just do that. But I know there is a third one. But pretty much that is, with these 5 that we analyze, all of them made it to the list. Some of them will be like a short-term investment, because when you buy, you just let it grow, accumulate profit for you. And there are some that it might reach a new high within a year or a year and a half. You can sell it and wait again at the valley. So for the one that will come back to the valley and go back up within a year and a half, you can swing through those. But for the one that will take a time to come to the valley and takes many years growing up, you can buy them at the valley and just let them grow for at least half the time that you think it might continue growing, so that you can accumulate a good amount of profit. Because again, it might take years for you to find it again around the valley line for you to buy. So getting out of it quickly, you may not accumulate a good amount of profit, and you might wait for a while to get back in. So those will be one to leave there to accumulate a good amount of profit before you sell it. So when we go back to HUM, maximum monthly chart, we can see last time it left that valley line that we want to buy it at. The price was 65. Here is 571. 571 divided by 65, you 8 times your capital. So I don't know if it's going to duplicate the same process here or not, but keeping it for 10 years or so, and you'll 8 times how much you pay for it, pretty much. So, but if you get out just right after a new high was reached, in fact, it lingered there for a while before it started going up. Or no, in fact, it exceeded the peak here. So when it starts, within 2 years or so, it exceeded this peak. So if you just sell it there, you'll have some profit. But this profit here, you won't lock it in, and then you might have to wait for years, 12 years later, to find it again around this valley line at a good price to buy. So those are things to consider. Thank you so much for watching our videos. We thank you very much for your time. Thank you for all your comments. And thank you very much for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading, it's one way to make money. You just start small, especially if you have a job. That is where you can slowly grow your money. You work hard to earn money, you put some to work for you slowly by pretty much learning how to swing trade and doing it one share at a time as well. You can see that one, even if you purchase it at what? You purchase just one share, $65, and you sell it 10 years later for $500. That's a good amount of profit. The goal is to make profit, and then you know that to make more profit, you just buy more shares. So, but just start small and grow your account from there. And that list that we swing trade from, we analyze, we put them through, we put the stocks through the first six filters before they ended up being on our spreadsheet. And for the new year watch list that we are going to be analyzing throughout the year 2026, we are going to be pretty much analyzing it now to see, if we are seeing higher lows, higher highs, for that to be in our watch list for the new year. And if it's well positioned, is at the value to buy, we might just buy some now going into it. So thank you so much for your time. For more of our swing trading tips or how to create your own watch list, will you please check the playlist in the description of this video. Thank you so much for your time. And this video is brought to you by Liberman.com, our online store. We sold to sell, and I have a tote bag that I listed there. If you are looking for a gift for a friend or a family member, or a tote bag for yourself, will you please check it out, please? Thank you so much for your time.